that sort of immediate shutdown of these very mechanically driven, completely unnatural as far as recessions go. So now the recovery is somewhat unnatural as well.
This is going to build to a lot of momentum as this year goes on. So I think the environment is going to heat up a lot.
We are relatively early in the global recovery. I think it's going to be quite a sharp recovery.
Expect more bouts of extreme volatility here because that's the release valve in the marketplace.
My concern is we get into a fully employed economy late next year and nobody sees the stop sign there. We don't slow down at all.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
$2.25 trillion from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures positive 4 points on the S&P 500. We are higher by about 0.1%. Tom Keene, a $2.25 trillion infrastructure plan. The details coming later.
And into a booming economy, as we heard from Edward S. Hyman of Evercore ISI, he is exceptionally optimistic. John, he's out to 2.80%, 10-year yield out 2 years, and he's so what? S&P will do better, and this American economy will do better.
We're talking about 1 million payrolls on Friday. Look at what France is talking about right now, Tom. France said to consider a national lockdown due to the COVID spike. The compare and contrast between Europe and the United States has been a key theme of this program, and there's the headline for all to see.
And there it is in France, as we saw from Merkel, I believe it was yesterday or the day before. And what's interesting, John, is the bet on the street. George Saravelis at Deutsche Bank moments ago, expert on FX. George Saravelis minces no words. He's optimistic on Europe amid this gloom.
Lisa, the euro just about holding on to a euro-dollar handle of 117, just about.
Yeah, except that you really start to wonder at what point this divergence has legs beyond just this moment, right? This idea that, yes, Europe is lagging behind the U.S., but people like Cervello saying, look, later on in the year, the pandemic will end. At what point does this lag time create frictions, create problems that create slower growth going forward? And that bifurcation between the United States and Europe only widens over the long term, John. And this, I think, is a longer term question.
Better data out of China, better data out of the United States still to come, and in Europe it is a struggle. Here's the price action this Wednesday morning. Good morning to you all. We look like this on the S&P 500. Futures are positive 0.1%. In the FX market, we just about held on to that euro-dollar 117 handle in the last 24 hours. 117.31 is where we are at the moment, up 0.1%. And another big spending bill down in D.C. This time, we're talking about tax hikes too. Your yield on a 10-year, up about a basis point. Your 10-year, Lisa, 171.73.
Yeah, and reaching 177 yesterday on this optimism about the U.S. economy, inflation, and jobs. We're going to be getting at 8:15 a.m. Eastern time today the private sector employment report. We're expecting 550,000 new jobs added. That would be the most since last September. People are expecting this to be a sort of harbinger of what to expect on Friday when we get that March payrolls report, expecting to be potentially over 1 million jobs added. John, question I have is, how will markets handle this? Meanwhile, at 10 a.m., we're going to be getting new home sales. Interesting to see the supply-demand dynamic here. We saw that the prices on homes in February rose the most, going back to 2006. Low mortgage rates paired with incredible demand for homes, especially outside of cities. How much does that affect the number of sales getting done? There just aren't any homes that are available. And then at 4:20 p.m., this is the time that we're being given that President Biden delivers his speech for this $2.25 trillion plan. John, can we call it infrastructure? I mean, is this infrastructure or is this a new deal? You know, I mean, if you take a look, it's about $600 and some odd billion toward bridges and roads, et cetera. The rest towards social programs, toward other aspects of his plans. And I think that that will be a key area to parse out how much support is there, not only on a bipartisan level, but also within the Democratic Party.
Your last point there is probably the key point. Where is the agreement within the Democratic Party? And we need to catch up with Kevin Cirilli a little bit later to do that. We also need to catch up with Brian Deese of the National Economic Council, Tom. We'll do that in around about 15 minutes' time. Lisa's right, $620 billion for transportation, $650 billion for initiatives tied to improving quality of life at home, like clean water and high-speed broadband. That is still an infrastructure issue. Let's be clear about that. But I take Lisa's point.
I mean, John, I don't know the English proxy here, but this is a regime change if they ram this thing through with the stimulus combined from 30 days ago, from what we've seen going back 40 years. I mean, this goes back to Ronald Reagan, and this is the effort of government to impart itself into society. The jury's out on what the moderates of Republican, the moderates of Democrats will do with this.
In a much bigger way as well, Tom. What we're talking about more broadly is the next phase of this recovery in America. Right now, we're not doing that in Europe. We're talking about potentially a lockdown again in France, said to consider a national lockdown due to the COVID spike. I think what's missed, though, Tom, is what's actually happening in the market away from the euro. The DAX is at a record high. 15,000 points on the equity benchmark in Frankfurt, Germany. Business confidence in Germany picking up. Why? Because right now China's looking okay and America's set to look better and better and better as the year grows older.
And you've got guys like Saravellos and many other shops, he's with Deutsche Bank, but many other shops looking beyond the vaccine failure in Europe. They've got to get it fixed.
Yeah.
You know, I don't mean to compare them to Brazil. In no way is Europe in the grim situation Brazil's in, but they don't want to go to that tendency.
Not at all. Let's bring in Peter Cheer, Academy Securities Head of Macro Strategy. Pete, I think the Chairman of the Federal Reserve would call this cross-currents. Cross-currents. China okay, the United States doing better, Europe struggling. How do you take all of that on board?
One, I'm looking really towards the stimulus package, what that plays out. And I do think we have to have a national security element. I do think the 5G, the build out of that is an important part of this. So one, we get the social element where it's helping in terms of making sure people in the inner cities get access to Wi-Fi. But I think there's a national security element there that we want to drive forward the 5G. I think we're supposed to see some of that same stuff coming out of DC to support the healthcare and medical industry where we can bring some production back on shore.
Peter, what is so important in this debate, and if you look at the Senate as the blocking feature over the last number of years, 8, 10, whatever years, it's a new regime. How does the new political regime, whatever we see in 2022, how does that fold into your fixed income world?
So what I think we see is a smaller package ultimately done fairly quickly. That's infrastructure spending. That's going to drive rates higher. Then I think we talk about a much bigger plan, and maybe this comes in 2 stages, what he's talking about later today, but we are going to see rates move higher. I think we see 2% in the 10-year within the next month or so as all this spending becomes reality. I think what's going to be important for the equity side is there a belief that it's really going to drive growth, job creation, or is this more one kind of dollar spent and it's done? In which case, equities aren't going to respond as well, especially if taxes become a big part of this package.
Okay, well, let's just parse out what you're doing right now, given that great degree of uncertainty. Are you staying away from fixed income, sticking with equities, because there is a greater chance that the equity side of the investing cycle will actually do better in the months ahead?
You know, right now I'm still looking at owning credit. I think credit spreads are going to do fine, so I'm overweight credit. I still like anything that's kind of associated with reopening, with any sort of infrastructuring. I like more and more the healthcare and medical side of things. I'm trying to avoid a little bit on the big tech still. It's been very volatile recently. I can't tell whether we've bottomed or not. There were some signs of a bottom. I think we probably have one more leg down, especially if the realization comes that if we go after corporate taxes, it's probably going to be those companies that are impacted the most.
Pete, you're surrounded by a lot of generals that are Academy Securities. I'd love to know what the conversation sounds like right now when you discuss all things the Chinese Communist Party versus the United States government at the moment. At the epicenter of the statement today is the following line: the challenges of our time, the great challenges of our time, not just climate and the climate crisis, the ambitions of an autocratic China. How are you taking the commentary from the generals, the conversations you're having every day, and applying that to markets at the moment?
So I think one thing that we've really come to realization is China is not going to change. China believes that the way they're approaching the economics, the way they deal with countries globally is working. So they are not going to come and revert to ourselves. So we have to go forward with that and realize there is going to be friction. We are a strategic competitor with China. We are going to have to, I don't want to say fight with them, but we are definitely going to have to compete with them for access to natural resources, rare earths. We're going to have to deal with them across the globe. They're going to, flex their muscles in terms of what's going on with Taiwan. So this belief that somehow China is going to behave like us is completely eradicated. We need to make sure we're protecting national security interests, which to me are 5G, blockchain, data mining, that type of technology. At the same time, things like PPE, we're going to have to be well aware of. And one thing that concerns us all is we like the approach that Biden's taking in terms of trying to coalesce a global approach to China. But as Europe remains mired in their own issues, I'm not sure they're going to be a good partner in addressing China in a timely manner.
And this is actually a point that John has made many times, this idea that how close is this alliance, given the fact that Europe needs China for some of the money that is fostered by trade. There's also a question as an investor, how you operate around the thesis that you just laid out, because we've seen a lot of money flow from the financial sector in the United States into China with this idea that that economy was maturing and becoming a really ripe area for investment. Would you pile on that trade?
No, I would be very cautious in what we're dealing with China. I think China is becoming a more domestic consumption economy, which is good. I think there are going to remain restrictions for U.S. companies to get a lot done into China, and that friction is going to remain. So I'd be a little bit cautious there. I do think this administration is less focused on tariffs, so we could see some tariff reduction kind of in the middle. Anything that's not viewed as a national security or national defense interest, there's going to be room to deal with China. So it's not going to be a one-way street of constantly battling. So I'd look for opportunities there. But anything that I think really has that national security interest or element to it, which I think is healthcare, national, and health and safety, I would be very cautious about that.
Hey, Pete, love catching up. Peter Cheer there, Academy Securities Head of Macro Strategy. So if you're just waking up this morning, this is what you have. A proposal from the U.S. administration, President Biden's administration, $2.25 trillion, a four-part, 8-year plan dedicating $620 billion for transportation, $650 billion for initiatives tied to improving quality of life, $180 billion of which goes to what's billed as the biggest non-defense research and development program on record, $580 billion off that. American and manufacturing, $400 billion to address improved care for the elderly and people with disabilities. Tom, if you're confused about the detail, we'll get some more clarity, I hope, at 4:20 Eastern this afternoon from the President of the United States.
We're going to get clarity there and also a measurement of the boom economy. We begin the 3 days of this jobs report. It's a 3-day report, John. As Lisa mentioned earlier, ADP, does it correlate into Friday? I don't know, but we're looking for a big number from ADP to start that off. And that's a fully employed America for President Biden.
And we're looking forward to catching up with Brian Deese, the White House National Economic Council Director. We'll do that on Bloomberg TV and radio in around about 10 minutes' time. Looking forward to that chat just around the corner. Here's the price action for you this Wednesday morning. Good morning to you all. Up 3 points on the S&P. We advance 1/10%. On euro dollar, 117.33. France considering a national lockdown. Our latest reporting. Into the bond market we go. Yields higher by a basis point to 171.73. And in the commodity market, crude 60.47. We speak to the White House next, right here on Bloomberg Surveillance.